Welcome to another enlightening video where we explore the timeless wisdom of Warren Buffett, the legendary investor and chairman of Berkshire Hathaway. In this video, we'll delve into one of Buffett's most iconic quotes. "I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over." This saying encapsulates his unique approach to investing, filled with valuable lessons that have made him one of the world's most successful investors. Let's break down the core concepts of Warren Buffett's investment philosophy, supported by major stock examples from his extensive portfolio. 1. Simplicity in investing. Buffett's message is clear: keep it simple. The 7-foot bars represent complex, risky investments. Instead, Buffett seeks 1-foot bars, the opportunities he can easily grasp. A prime example of this simplicity is his investment in Coca-Cola Co. The beverage giant's straightforward business model and enduring brand have delivered steady returns for Berkshire Hathaway over the years. 2. Margin of safety. Buffett's strategy focuses on preserving capital. He prefers the 1-foot bars, where the downside risk is minimal. This principle is epitomized by his investment in Apple Inc. AAPL. Despite the company's growth potential, he entered at a time when the stock was undervalued, providing that essential margin of safety. 3. Long-term perspective. Buffett is a patient investor, looking for opportunities he can hold on to for the long haul. One of his most famous long-term investments is in Wells Fargo, WFC. Berkshire Hathaway held significant shares in the bank for many years, demonstrating Buffett's commitment to the power of compounding and sustained growth. 4. Quality over quantity. Buffett values quality businesses over quantity. An outstanding example is his investment in American Express, AXP. The company's strong brand, customer loyalty, and financial stability align with his criteria for a high-quality investment. 5. Economic moats. Economic moats are central to Buffett's strategy. Berkshire Hathaway's investment in the Coca-Cola Company, with its well-established brand and distribution network, exemplifies this principle. The moat surrounding Coca-Cola's business ensures its enduring success. 6. Value investing. Buffett is the quintessential value investor, seeking undervalued assets. One of the prime examples of his value investing approach is his stake in IBM. He saw IBM as an undervalued tech giant and made a substantial investment. 7. Risk management. Buffett's famous rule is, never lose money. Berkshire Hathaway's investment in insurance giant Geico reflects his approach to risk management. Insurance provides a cushion against financial setbacks, helping to minimize potential losses. In conclusion, Warren Buffett's investment philosophy, as encapsulated by his iconic saying, offers timeless wisdom for investors. As you navigate the world of investments, remember these core principles: simplicity, a margin of safety, a long-term perspective, quality, economic moats, value investing, and risk management. And don't forget to look for those 1-foot bars, the opportunities that offer steady, long-term growth. Thank you for joining us in exploring Buffett's enduring investment wisdom. Thanks for being till the last of the video. If you find it worth, please subscribe the channel and please leave a feedback in comment. Thank you.